Good morning, Thursday, August 21st. Zach Howard here with a update to start today in markets. Let's just look at a broad range of levels across the TradingView platform, which I haven't used in a while here on these morning market videos. And how I start it every day when I look at my notebook is the volatility regime of the equity market, the treasury market, the currency markets. We're looking at here on the screen the volatility reading, the VXN of the NASDAQ, aka the Qs, the high technology space, the Microsofts, the Nvidias, the Apples, all embedded thereof. And a volatility reading here of 20 is risk on. If we look historically where this higher beta market has gone, it can get into the 50s. It's not a really great chart, but the takeaway here is over the last 3 months, it continues to consolidate along with the VIX. The VIX here has shot up from its lows of 14 last week, where you could buy Farcoin, but it still makes a lower high here on the trend basis. And in my notebook, it says it's kind of tapping out here around 17 potentially today as we go into the macro event that is Jackson Hole, the annual central bank vacation symposium. They put them all out on the stage, a nice background in nature, and pretend to opine on the world of interest rates. Going into this event, like a lot of macro events, CPI, etc., the market hedges their bets for a short-term basis, particularly around these 0 days to expiry options. And we see potentially the VIX melting away after tomorrow's announcement, falling back to that 14 level again, which will put a bid into markets, particularly the S&P 500. The street got more bearish into this week. 50,000 contracts in the CFTC futures negative at it as the market participants continue to try to hedge positioning. That lining up for a tailwind to go higher. Everybody continuing to try to pick a top, looking at any narrative, any macro headline that hit the Bloomberg or hit your screen on your phone about, oh my God, this is the end of the bull market. But when we look into the interest rate space, we see a widening yield curve in that 2-year, 10-year space, 55 basis points. A steepening yield curve says growth and inflation accelerate higher. That is a positive backdrop for continued risk-on moves despite valuation, which doesn't come so much into play. 490 basis points on the 30-year U.S. government bond. Healthy level here for where the market is kind of pricing in inflation. Now, like I say, I see the market going higher. Don't have any broad stroke takeaways there. Bitcoin has pulled back, consolidating in this range here now of 112 to 123 over the last 3 months. Shot up to an all-time high of just 124 just last week. However, if I was going to put the Y in price action ever since that all-time high, it goes to those ETFs. The ETFs move the market a lot in a positive direction with inflows and opposite. And over the last 4 days, 4 consecutive negative days of outflows in the Bitcoin ETFs. Over, my notebook says over $1 billion has come out of those, particularly through that IBIT, the bigger institutional holding, BlackRock's ETF. Alongside with Ethereum seen 4 consecutive days of outflows as well out of those ETFs. So we are consolidating in a range in the shorter term movement in Bitcoin, like some other trades here. But my notebook still says this is a healthy market, if anything, especially looking at trends of interest rates. The only thing that gives me pause on the global outlook of growth and inflation accelerating as a tailwind for further risk on will be oil. Oil is a dog. It is a dog in terms of year to date. It just continues to tread water in the 60, 61, 65 range. which doesn't line up with every other macro trend that says growth's going higher. But probably that's more to do with the new technology world that we're going to, where the old traditional metrics and oil being one of them don't really reflect me term. I don't know if I was going to point on them. MicroStrategy, did we get the floor on that price yesterday where Sailor is going to use these other offerings to kind of stabilize the common shares? Is it around 330? Don't know, but it is stabilized here in the last 2 days. You could go back and forth between the stretch, STRD, and allocate thereabouts in terms of the common until you get your preferred allocation if you want to have exposure to that. Higher beta trade has a MNET that continues to fall, but I think we're probably around the ceiling for strategy. That's what I got for you today. See you tomorrow, maybe. Have a good one.